All right. All right. Okay. All right. Thank you very much for confirming. I don't know why, but these days, yeah, there's a lot. Okay. There's a lot, but also, besides in trading, there's a lot that is actually going on, and I think, I think we have to really focus. You know what I mean? We have to really focus when we are, I don't know. But what I mean is you have to channel your energy to understand when you are trading, you have to focus on trading. When you are doing the session, you have to focus on trading because I think where we lose track of things in is when we're trying to do a lot of things in one time. Okay. So tonight, I think the main focus we have discussed going to be the Fibonacci. Okay. Before we move on to Fibonacci, did anyone get any maybe better understanding by looking at the market in terms of the candlesticks? I just want to confirm that. I think last time we talked about the candlesticks and we had a conversation around certain candlesticks on highs and the lows. Okay. So if you did take some time and look at the charts and have a bit more understanding the function of candlesticks and the meaning of them in certain points in the charts. But otherwise, let's just jump in on the Fibonacci. Okay, just a bit of a background before we move on in terms of why we use this tool. So Fibonacci retracement level. What are Fibonacci? So basically Fibonacci levels, they indicate most of the time the support, the resistance, the supplies, and the demand zone. Okay. So most of the time, these levels are associated with the percentage. So the percentage is basically how much has the price moved. You know, you can see that in the Fibonacci retracement level, you've got 23.6%, 38.2, 50%, 61.8%. So you can Google and learn about this if you are into numbers or if you're into maths or also if you're into stats, you can Google and learn the history about it. Okay. But this indicator is mainly we use it, to mark, certain points in the charts. Mainly we connect 2 points. Just for example, an example here is let's say the price of something rises to 10 rand. Okay, let's say a price of apples. Price of apples is 10 rand. Okay, and then suddenly there's a drop, maybe a drop of about 23.6% of from that 10 rand. That means there was a retracement of the price to 23.6%. Basically, those percentages on the Fibonacci, they mark the percentage drop of a price. So in this case, we are talking about instrument. So when we say instrument, we are referring to number one, currencies, a currency pair. Okay. Number two, we can be referring to a commodity. So that can be gold, that can be platinum, that can be oil, that can be any commodity that can be traded with the charts. It can also be a form of indices, can be your Nasdaq, can be your index, your Dow Jones, US 30, can be your SP 500s, it can be your UK 100, it can be any of the indices or your DAX. It can be the stock. Maybe you're looking at the share price of Apple, share price of Meta, share price of Shoprite. So you can use the Fibonacci even on cryptocurrencies, maybe you're looking at Bitcoin or Ethereum, whatever instrument that can be traded that has a chart, you can use the Fibonacci because the price of any instrument can drop by those levels. Okay. So there are basically two levels that are important. It's the middle trend zone. I'll show you what I mean by that. So the middle is the 50%, 60%, and the ending trend zone. So that is a zone where basically it's the end of a trend, where the market is going to make a reversal. Okay. And then you've got obviously the mid trend zone is a zone. It's the mid zone, like I've said before, the 50, the 61% is where the market goes back and look for liquidity. So that is another zone. So the ending zone is where prices will change direction. So changing direction means what? A reversal. Okay? A reversal. So I'm sure a lot of traders, if you go to your MetaTrader 4 platform, you are more likely to see the Fibonacci levels. You're more likely to see the 68, the 50, the 61.8, but you need to add these three, the 5, 11, and the 16.8. So you just need to add them on your chart. It's very simple to add them. I will show you, okay? So these are the level that we use. We use this level according to the strategy that we use to trade. So these are the levels. So the 5, 11, 16.8, 15, and 61.8. Okay. So these are the levels where you're more likely to get good entry point. So make sure you can add those. Okay. If you don't know how to add those, we definitely will show you how to add those Fibonacci levels. Okay, we're just gonna dive through the slides and then we will do the examples. Okay. Maybe firstly, what I can do is I can just quickly go towards the chart just to show you what is the Fibonacci level. Okay. So let's go to share. All right, and let's go here. All right, okay. So for example, let's go to any charts. Let's take USD you know, because of what is happening between the USA and China. Okay. This is M15, not much is happening. I saw someone talk about AUDUSD. Let me see what's happening on AUDUSD. Nothing much also. Nothing much is happening. Okay. All right.
Hey,
Hello. Okay. Is there any questions so far? Are we all in the clear in terms of question regarding the foundation of the Fibonacci? Okay. All right. Okay. Okay. So this is the apologies. I'm not sure. Okay. Do you have any question regarding the foundation phase of the Fibonacci? Just the understanding in terms of it being the percentage point or percentage drop in terms of the price. You can just unmute and then ask a question so we can all be in the clear, okay? Because the foundation is very important because that is where we get an understanding. Okay, for example, if we go here, okay, this is AUDUSD, okay, it has really moved. Okay, let me just go to the daily charts. Okay, so yo, there's Okay, I just want something that it can demonstrate. So, for example, with the Fibonacci, you're gonna mark this high. You're gonna take that high. That is right over there. So you take that high. So what I do is I use this. I think someone asked me. So I use this insects and then shape. So I pick a rectangle. So that's the one that I use. So we take this as the low from the top.
Yeah.
That is the low.
Vale.
Is there a question?
Is Cedric on camera on purpose?
I've got no idea what I'm doing. Yeah, but if you can help me along, and I don't know how to close the camera.
Okay, let me do this. Okay.
Thank you.
Yeah, that's good, man. You're good. Yeah, I think we're good on video, né? Okay. Okay. So basically, I use this. So you go to insect. You can make this rectangle any color that you want. Okay. By the way, so you can just click on it. You can click on it. Okay. Double click rectangle properties. You can pick any color that you want. It's just that I prefer gold. You can pick any color. For example, you can pick orange and to do orange. You can pick rectangle property. You can pick what? Red. You will red. Okay. It's just that I like gold. Okay. I think somebody was asking me, do I have like a special indicators? No, it's just this. Okay. So and then so I mark those zones. So what am I marking? I am marking the highs and I'm marking the lows. Okay. I'm marking this high and I'm marking that low. Okay. So that when I pull off a Fibonacci, you can see this movement here. This movement now is some sort of a compression. Maybe we can call it like a staircase, or we can call it like a spring. You can see this movement. It's move up, down, then move up again, and then down. So this is like compression. It's not as aggressive as this move here. Okay. So this was a straight line move to the upside. Now there's this move from there to there. Okay. Okay. Now back to the Fibonacci. Okay. So when the price has dropped from this level, which was the high level, towards this low level, okay? Now we want to see, for example, in terms if the price start retracing, start moving from this low maybe to that low, how much percentage was that increase? Because this time from there to there, the price was dropping. Now, when the price reached the bottom here, it started moving up. Okay, again to the bottom, again move up, again to the bottom, again started moving up. So we want to measure the movement to the upside in terms of percentage. So we look for the Fibonacci here on the line. So we draw a Fibonacci from the low towards a bottom. Okay. So this is the lowest. Okay. So you can see mine. I'm gonna just delete these trend lines, and I'm gonna delete these rectangles just to have a few things going on. And I'm gonna remove those period separators. I think they're also causing a bit of a chaos. Okay, so just have a few things going on. So now, even with my Fibonacci properties, if you go there, you click, you can see I've got these levels. Okay, so the level that is 23.6 is already there. 50, 61.8 is already there, but you must add the 5 level. Okay, you can see there, this is 0.05. That's what you add. And 0.11 is the 11 percentage, 11%. And another one is this is the number that you add is 0.169. This is 15.9. Okay, so you click add. So when you click add, you're gonna add these numbers 0.05, 0.11, 0.169, and it will be this level that you're gonna be adding. Okay, style, that is a line. Parameters, basically you remove this, you unclick this ray part. Okay, and then I think these are just common things you need to add. So just red, the color of it. You can change the color just as I like red. Okay, so you can see on the left the Fibonacci levels. Okay, let me just remove this. Okay, you can see on this side here. I'm not sure if it's clear. I'm gonna mark the levels using the see, I'm gonna mark level using, see this level. Oh, this also is also this color. Okay, let me change this line into another color. Okay, let me change this into this color. Okay. So if I move this line is here now. This is a 50 level. This is 61.8 level. And this level here is 61, 16.9. And this level here is 23.6. And this level is a fifth. And you can see if you go and mark using this rectangle, you can see a very nice movement. Okay, so there was a drop here. Okay, and there was this movement. Okay, another movement towards the level. Then, and you can see it clear. Okay, I know you can clearly see that 23.6 level was some sort of a crucial level, and the price retraced back to this level, and it started moving. The price started moving to the upside. Okay, to the upside. Okay, so in this zone here, the 61.8, the 11th level, the 5th level, the 5% level, these are levels where the price is more likely to reverse. I think in the slide it says change direction is way more likely the price will more likely to change direction. So these are the levels where you look for a change in direction, where you look for like a head and shoulder, a triple bottom, a QML. So these are the levels where you look for those. Okay. And then when you go to these levels here, up just above 61.8 and 50 is where more likely, most of the time, I'm not saying all the time, where you're more likely to see like a big M. So a big M is like when the price is doing something like this. Okay, hopefully we get an example where the price will get something like this, where the price will go back towards the levels and continue with going up. Okay, let's look for another chart because this one is a mess. Okay, okay, let's look for another chart. Okay, let's mark this. So this is our low and this is our top. Okay, maybe we can mark just here, these levels, right where we have candles. Okay, so I'm marking these levels from there to there. All right. Are we good with the sound and the screen? So I'm marking this movement, right? So this is a bullish movement where the market is actually moving towards the upside. Okay, so the way that I mark with the Fibonacci, I draw from this low towards that high. Okay, so if I'm drawing from that low, from this level here, so I'm gonna take this because I want to show you. So I'm marking from these lows, from this low. So this is a low that I use. Okay, Yes. So I'm marking from this low. So we take the Fibonacci there. And that is the high that we're looking at. You can see now the price started dropping, and it dropped to the level of how much? 38.2% from that level, which is in line with that level of demand zone. Remember, we said that the level in the Fibonacci, they go in line with support, resistance, supply, and demand level. You can see that those type of candles are formed there. The price moved towards upside. And if you mark those levels once again, let's mark those levels so you can see them. What is critical is that you know how to mark. Okay, you can see there, this level, 16.9, 11%, 5%. You can see there was a very nice entry for a sell. And if you've entered your sell and you were holding it, if you've entered a sell and you were holding it up until that level, from there to there, let's just check how many pips. From there to there, it's over 640 pips. That's a lot of pips. And you're holding your sell based on the Fibonacci retracement. Okay. Is there a question? Oh, okay. I thought that was a question. All right. All right. So let me just check. Oh, we're still recording the session. Okay, perfect. So if you've been holding this, so now I think since the dollar is at this level, chances are you might get a strong dollar this week. We might be having a strong dollar this week looking at the chart patterns. So it's just above this. So it might just push towards the level and then makes more drop. Okay. Are we good? I'm hoping we're getting this one. So if the market has been on the bullish market, so we draw the Fibonacci from the low towards the high, okay? So if the price start dropping, we check how much in terms of percentage has that drop been happening. If that drop is over 61.50 level, chances are it's gonna retrace and it's gonna retrace to the next percent, which is that level, okay? All right. Okay, perfect. Okay, let's just quickly just go back to the slides. So the slides, they explain more things, okay? All right, so the first entry is more likely to be between the 50 and the 61. This is a level. Obviously, you have this level in terms of your MT4. And a lot of times, these are the levels, you know, after the market has been moving on the trend, has been dropping, or maybe even going up, there's a lot of liquidity within these zones. So between the 50 level and the 61 level, there's a lot of orders in those zones because you normally like to see a double top or a big M. Okay, I'll show you what I mean by a big M. Okay. And then let's go to the next slide. Okay. So I think these levels, I think we saw this level. And then obviously the second part, I think I did show you that the 5, the 11, and the 16.8, this is a level. Normally you have to add this part, okay? This is where I think on the first charts, we saw the head and shoulder pattern. You are more likely to see even a QML in these levels. So these are a level where you're more likely to see a reversal where the price change direction. So this is basically what happens in terms of the 5, the 11, and the 16.8 percentages in terms of the Fibonacci, okay? I think we've spoken about this. Is that number one, if the market, okay, if the market is moving in a downtrend, we pull from the high level to the low level. If it's moving on the rally, we pull from the low to the high. Okay, just another example on the MT4. You can see this one. Okay, the market has been moving on the downtrend. Okay, so what do we do? From the high towards the low, from the high towards the low. So from the low, if we see an increase in terms of the price, because the market has been dropping, you mark the low and the high, and the price start moving towards the 5 and the level, and you start seeing those head and shoulder pattern right. Okay. Perhaps let's do another example. Let's do another example. Let's do another example.
President, is it me? You sound a bit bumpy. Is it me, guys, or?
It might just be the signal on the network, possible.
Okay.
Hello?
Let me just hear from the other guys.
Okay, okay. Okay.
Okay, you're back now. It's fine.
Okay. All right. Okay. Thank you very much. Okay. Let me just quickly look for another example. Okay. This is another example. We're gonna mark this high and we're gonna mark this low. Okay. So we take the Fibonacci once again from, you can even take from this low to this high. Okay. So from that high to that lower, that's what I mean. Okay, we take a look at that. Okay. So we can see those levels. So we're marking just this zone. Okay, so the price moved from that level to that level. Okay, so we can see that the Fibonacci actually it has formed from that, because we want to measure, basically want to measure this retracement. You can see the price reached a bottom, it started pushing up. So pushing up, that was about 38.2%. The 50% level was just above there. So the price did not, this price here did not reach the 51.50 level. Okay. What had happened from that level, it started even making further drop. Okay. So we can take that. And this was the lowest low. Okay. So we take that Fibonacci towards that low. Okay. And you can see there was not much reaction. Okay. But if you go towards when the price started moving up, okay, this is when the price started moving up. So the price reaches bottom and started moving up towards the upside. Started moving up, and we can see this level as 23.6%, and this level here 16.9 in this level here, once again 11%, and this level 5%. So these levels are the one that will give you a sniper entry when the price start reversing. When the price start reversing, that is where you're gonna get your sniper entry between the 11%, the 61.9% is where you're gonna get your sniper entries. When I say sniper entries, I mean entries at the lowest possible price. When the price start reversing, start building those their orders. Okay. And if you take a look, okay. So after that drop, the price made, okay, so this was the first drop. Okay. The price made another drop from there. So from that low, there was a drop towards that low. Okay. And then there was from this low here, now we measure another drop, which was the biggest drop, the third drop. Okay, so the first drop I'm marking using these lows. Okay, so this is a low of this drop, and this is the retracement from that another drop. So let me just mark these drops so that you understand what I'm referring to. Okay, so this is the first one, and this is the last one, second one. Okay, and then this is the last one. So 1, 2, 3. Okay, once you start seeing this one and you understand them, so now you're gonna, once you start seeing the price start touching the same level 3 times and it's on the dead level of a drop, you understand these levels the more we do analysis together. Okay, so this is on the daily. So the price start doing a reversal, the fifth level, the 11%, and 1.8 is where you're more likely to get a sniper entry. Okay, so once again, we saw this big breakout towards that level. This big breakout, a big move. Okay, and another move. It just broke above those levels. Remember, there are some traders who've got their stop losses just above these zones because they saw this big M. Okay, so this is a bigger M. Chances are this big M is clearly seen on the higher time frame, which is your weekly time frame, clearly seen. So you've got traders have got their sell orders around here because they saw this big M. So big M is a double top, the first top and then the second top. So it makes a shape of an M. Okay, so as it dropped, the price broke above. You can see here, there was even a fake out here, just to fake traders to place their sell orders. The price broke above it. Let me quickly just check the weekly time frame of this one here. Is there a question? Okay, let's take a question. Sounding better. Same issue. Okay, sounding better now. Okay. Okay. All right. But I think the recording will be very much clear. When you're watching the recording, it will be very clear. Okay. So for example, if we take it once again on the weekly time frame, I'm just gonna mark not the pins, but the actual candlesticks. Okay. So this one is an example of this was a bearish market where the price actually dropped. Okay, so how do we mark the Fibonacci? So you can see that the price, the Fibonacci we take from the high towards the low. Okay, so you can see here the price is just above. Now the price is just above these levels, just above now the 61.8. So that's that. So it's just above these levels here that are critical. So now what I'm expecting, I'm expecting that this price will react to those levels. Let's zoom out. Do you see a particular shape? Yes, there's a particular shape here, pattern. So the price more likely to react and make a drop in that zone. Okay, let's just zoom in. So in these levels, okay, let me mark what I'm seeing because sometimes I'll mark things and I realize that later on it's me who is seeing those things. The rest of the guys are not seeing what I'm seeing. Okay, so I'm gonna mark that level. So this is a level where I am expecting. That's what I'm saying. Possible, and you can see here these levels. So these levels here, this level, 1, 2, 3. Okay, so the first touch and not this one fell to get at this level, then the second touch and the third touch. Okay, So you can mark these levels as R1. Okay, so this is R2. R1 means resistance level number one, touching the level, and then another resistance here. So the price here going to that level, and then obviously dropping. Chances are this week you're going to have a very strong dollar. Remember, on Friday, the market will be closed due to Good Friday. But I've shared that document. Today it's Monday. We're going to have another session on Wednesday. Okay, I think that is for tonight. Please go through the document that I've sent. And I think this video will also be much helpful. I don't want to be long. I think that will be it for tonight, guys. Apologies with the sound and the network and everything else, but we'll have another session on Wednesday to cover the Fibonacci.